In a whirlwind 24 hours, Bitcoin surged to a new all-time high of $123,000 before retracing sharply below $117,000, driven by coordinated whale activity. A dormant Satoshi-era wallet transferred over 17,000 BTC, valued at more than $2 billion, to Galaxy Digital, sparking heightened volatility and widespread profit-taking. Yet, amid this turbulence, institutional inflows have remained relentless. BlackRock's IBIT now commands $88 billion in assets under management, cementing its position as the firm's most profitable ETF ever. Total ETF inflows this week alone hit $3.7 billion, with retail investors holding a commanding $135 billion of the $158 billion ETF market, a dramatic flip in power dynamics. This surge in institutional participation isn't isolated. The Czech National Bank made headlines by purchasing $18 million in Coinbase stock, signaling that sovereign financial actors are now participating in public market proxies. Even Vanguard, long a crypto holdout, quietly acquired an 8% stake in Strategy Inc., further underscoring the broad-based shift in traditional finance sentiment. Meanwhile, Ethereum is experiencing a structural supply shock as staking soars past 29%, and exchange reserves plunge to 8-year lows. ETF inflows for ETH now exceed issuance tenfold, creating significant pressure on circulating supply and supporting the case for continued price appreciation. At a structural level, the regulatory landscape is also evolving. The U.S. House has declared this week Crypto Week, with 3 pivotal bills on the docket, including the Clarity Act, which could formally define digital assets as commodities. This move could finally bridge the gap between regulatory ambiguity and institutional risk appetite. Simultaneously, Binance's launch of a bonding curve token model is challenging the status quo in meme coin mechanics, while platforms like Hyperliquid and Pudgy Penguins are gaining momentum in derivatives and NFT infrastructure. As exchange inflows creep higher and liquidity thins at key levels, a short-term cooldown may be warranted, but the broader signal is clear. The foundation for the next phase of institutional crypto adoption is actively being laid.